Absolutely. Great question. So we really look at it as US dollar performance and interest rates. That's certainly a big one. If the US dollar is performing, it tends to not be great for gold. You've also got US bond yields. One of the main drivers is as an inflation hedge. So as inflation gets rolling, a large segment of investors do tend to turn to gold in that environment. And then global conflict as well. We've certainly seen that as a big driver in the past, perhaps a little bit less today, but certainly a store of value and a safety valve, if you will, in trying times. I think it's really a whole package that they should be looking at, spanning from management. Does the management team have the requisite experience in both exploration, but also capital markets, financing, and marketing? That's really key. You need to be able to fund the exploration projects. Geology. Are they even in the right environment to discover or find the commodity of interest? You don't want to be in a coal belt necessarily if you're looking for gold. That wouldn't really work well. And then also the jurisdiction. Are they in somewhere that is stable and accepting of mining and without any undue geopolitical risk from either conflict, but also potential expropriation or loss of that exploration ground or discovery? Great question. So the mining history of Nevada goes back over 150 years now. So we're looking at something that started up in roughly the 1850s with the discovery of the Comstock lode southwest of Reno in the western part of the state. And then as far as gold mining, modern gold mining really started up in the 1960s with the discovery of the Carlin mine on what's now called the Carlin Trend. And also, if we're fast forwarding today, Nevada is a huge gold producer on a national basis in the US. It accounts for about 3/4 of US gold production. And globally, Nevada on its own is the number 4, number 5 gold producer. So it's huge as far as the US mining industry goes. Absolutely. So it's really a whole, there are a number of advantages, really. The first one comes down to geology. So Nevada has the right geologic environment to host not only a lot of gold deposits, but some very, very large gold deposits. And it's still delivering new discoveries by both small companies and some of the global giants like Barrick Gold to this day. Access is excellent in that it's a relatively developed state with a good network of roads, rail, and the rest of it. The regulatory environment, as far as how you permit your project for both exploration but also construction and production, is very well established. And the long mining history means that you have a wealth of a really skilled workforce as far as drillers, geologists, mining engineers, and the rest. So it's really a whole confluence of factors, but together they all make it a great place to work. Absolutely. So it's really all in a continuum in the exploration process. So in exploration, you have a property, and you're going to do quite a bit of surface work typically before you start drilling, which is ultimately what we would call the truth machine. So you'll be mapping the different rock types, you'll be taking rock samples, and essentially getting weights of evidence. And where your targets will be, that's essentially your bullseye. And you can think of the drill rig as being your darts, and that's what you're shooting for. So that target hasn't been tested with a drill. And ultimately, if you drill it and you're successful, you end up with a new discovery. And then as you add to that new discovery with additional drill holes, that's when you get a zone. So it's really all part of a continuum from untested target to a zone to a deposit, and ideally all the way through to a mine. So I'll say with a grain of salt. There are a lot of things, factors that go into interpreting those results. It can be as simple as grade. Is there a lot of your commodity of interest or your metal of interest in that drill hole? So is it high grade or low grade? Is it at surface? Or is it 2 kilometers down? Is it oxidized or not, or unoxidized? So is it easy to process or hard to process? And something as simple as how were the holes drilled? Did it go right down the guts of the deposit, or was it drilled across the deposit or across the occurrence, which would give you a more realistic representation of how wide it might be. So that's a great question, and it really depends on what the goals of the company are. This will differ widely between companies, but really a couple basic things remain true regardless of when a company chooses to do that resource estimate. One, you need enough information, geologic information, through drilling. So if you have 1 or 2 drill holes, well, that's not realistic. If you have 50, 100, 150, that you should have enough information to, first of all, create what we would call a robust geological model, so 3D model of what's in the subsurface, and then be able to do the estimate of how much of your commodity of interest, in our case gold, is actually within that deposit. Again, that's another great question. Typically quite low. One of the often quoted statistics is roughly 1 in 1,000 exploration projects will become a mine. I think it's probably pretty good ballpark, but it really reinforces to me, to our team, the importance of focusing on good jurisdictions, prospective ground, management teams that have the technical experience and knowledge, but also that capital markets experience and knowledge as well, because you're looking to mitigate your risk up front so that perhaps you're 1 in 100 or 1 in 50 rather than 1 in 1,000. So a Carlin type gold deposit is one that is hosted within limestones or related rocks. That's simply put. They're typically found in rocks between 350, 550 million years of age, and most of them occur within the Great Basin of the Western United States. So this would be Nevada, and to a lesser degree, Idaho and Utah. They can be very, very large. Some of the larger examples are more than 30 million ounces. And you can get both oxidized, so weathered and rusted, we'll say, examples, but also sulfide, which would be full of pyrite and other sulfide minerals as well. Absolutely. So cyanide itself is not used at an exploration site in modern exploration. So we never see it at anyone's exploration site. Where it does come into play in the exploration process would be at the assay labs. So we all, whether we're a small exploration company, a developer, or a producer, we all send our samples off to accredited assay labs. And there's a type of assay or analysis that they do in the lab that uses cyanide to analyze how much gold is in your respective sample. And then that information, if it is easily dissolved by cyanide, that can tell you how you might end up processing your deposit. So it's small amounts of cyanide in a very controlled lab environment. Great question. We'll start with oxide deposit. So an oxide deposit is one that has been weathered, and that can either be by surface water or subsurface water, so that you've stripped away those sulfide minerals, and those sulfide minerals would be things like pyrite or fool's gold. And so what you're left with are iron oxides, clays, and related minerals. And so they're relatively straightforward to process, quite benign, because nature's done that initial processing work. A sulfide deposit would be one that has not been weathered. So you still have those primary minerals like pyrite, and then the risk or the disadvantage is that you need to do more complex processing, and you can also run the risk of having acid rock drainage or other associated challenges if you're developing a sulfide deposit. So oxidation and cyanide solubility don't directly relate to gold grade or the grade of a deposit or the grade of a sample. Where they do come in, if we start again with oxidation, an oxidized gold deposit or gold sample will typically, the gold there typically can be liberated with cyanide or by cyanide processing methods. So the cyanide comes in, that's how you're going to process that in a controlled heap leach. So essentially a large dump of rock that a cyanide solution is introduced to, and the gold comes out the bottom in solution. How they relate to grade would be what your recovered grade is. So you'd have your primary grade from your fire assay, you then do a corresponding cyanide solubility test, and the ratio between those two gold grades would be your recovered grade or your cyanide solubility ratio. Again, another great question. So typically we have two types of mines. You have an underground mine that you'd access with a shaft to a network of tunnels. Typically they have quite a small footprint on surface, so you're not disturbing a lot of ground. Then we can contrast that to your open pit mine, which is effectively a large hole in the ground. Now the difference in the two is that typically your open pit mine costs less to build and less to operate. So it tends to be a lower cost affair. The challenge though is that your open pit mine is also a large hole in the ground. So your permitting process could be more involved, could be longer, and you could meet more local opposition for that open pit operation than you would an underground. Absolutely. So if we go right back to the beginning of that process, what the steps are, look like, typically you'd have acquisition of the project or the property. You'd have your initial exploration work and drilling. You'd make a discovery. On the back of the discovery, you'd look at your initial resource estimate. If it's positive, you typically look at a permitting process, economic studies, project financing. So how are you actually going to pay for this mine that you're attempting to build? And then ultimately your construction decision and production. So it's certainly a long process. It can be a very involved process, but it's certainly achievable. Yeah, they certainly can. There are a lot of notable recent examples, sort of over the last 10 years of companies who have made that transition. Companies like Rox Gold or True Gold in Burkina Faso have made that jump. A bit closer to home, you have Pure Gold in Red Lake, Ontario, or Orla Mining down in Mexico, who've all made that transition over the last 5 to 7 years. So it's a great question, and I think there are a lot of factors to keep in mind. Typically, I start with the team. So that's both the management team and the board of directors. So do they have the necessary technical knowledge base to effectively explore and effectively deploy capital? And also looking at that same team, do they have the capital markets knowledge and the relationships to be able to effectively finance the exploration projects and also market the story to create that value in the market. Also looking at the projects themselves. Do they have the geologic potential to deliver discoveries and resources? That's certainly very important. And then also looking at jurisdiction. Are they in out of the way places with a regulatory environment that might not be so mining friendly, or are they perhaps closer to home or in more established mining jurisdictions where there is an established permitting regime? You're not going to lose your project, and ultimately you're going to be able to deliver something of value.